Well, hello everyone. Good morning or good afternoon, and welcome to the last trading a smaller account class of the year. As usual, I have way more to cover than we can possibly do in 45 minutes, but we're going to have a good stab at it. We're going to look at some bearish opportunities. I had a request in a survey or in a comment to a class in the last week to look at a bearish one ATR trade, and we didn't quite get to that Friday. So we're going to do one of those. We're going to look at some bullish opportunities. We're going to look at a bunch of setups. And then if you haven't had enough of me after this 45 minutes, I will be back after James does his thing. And I will be back filling in for Mike Fairborn at 2 o'clock Eastern. So you're welcome to join me for that. We'll be talking about buy right covered calls and a couple of different ways or thought process in which you might choose to enjoy or employ that strategy. So I've got some people typing in that they're glad they're able to join live. I'm assuming that typically you're watching this in the archives, but I want to welcome each and every one of you that is here live, and a huge kudos to all of you who work a long day and then watch this in the evenings. Yeah, there's not too much white stuff, actually. It's just a little hazy today here in Salt Lake City, but we've had weather in the 50s, which is, encouraging if you don't want to have to get your winter coats out, but depressing to those of us who like skiing. So there we go. In any event, welcome to, AP 514 and Wiley and Frank and Bernard, to all the usual suspects, and to those that are perhaps here for the first time as well. We also have the privilege of having Connie Hill with us in the chat. She's a friend and a fellow coach. She knows all the strategies I'm going to talk about today, inside and out. So if you have any questions, don't hesitate to ask. And between Connie and I, hopefully we can get answers to your questions. If you're not following us on X, consider this your formal invitation. My handle, Barb Armstrong CS, Connie's Connie Hill CS. We're posting content there on a daily basis that we think you will find helpful. Yeah. So Francisco is saying, are we restarting the account next time? Yes, we are. We're going to set it back. And this year, somebody said, with inflation, are you going to go a little higher? I'm going to have actually 3 different accounts over the classes that I'm teaching. This account we're going to reset to 25,000. The last 4 or 5 years we've reset to 20,000. We're going to reset to 25,000 the first class in January. Yep, which will be a week from this Friday. Yeah, just FYI. Okay, so let's get through our important information so that we can get right down to business. Know that options carry a high level of risk and aren't suitable for all investors. We do kind of a combination of stock and option trades in this class. Today will be a lot of options, but you can take a look at the bullish setups and you could use stock strategies with those as well. We use the Paper Money software application on the Thinkorswim desktop platform, which is a brilliant place to learn. And, make sure you're familiar with the strategies, make sure you're familiar with the mechanics of how to use the platform. There are some nuances and differences. One, it's much easier to reset an account in Paper Money, one might argue. Also, short option positions will never be assigned early in Paper Money, and that can happen in a live account. Okay, so I'm going to update this. We started, this year, actually a year ago, November. So in November of 2023, we started with 20,000. Our max position size was 5,000, and our max trade risk was 500. And those numbers haven't changed, even though our portfolio has had its best year ever and has doubled in size. Our focus is on the short to intermediate term time frame, and we're looking at both bullish and bearish opportunities. And as somebody saying, is that typical for us in this class? Yeah, no, best year ever. We're usually up about half that over the course of a year. Okay, so let's get out to the platform. And we are going to start with the S&P 500. And so, when we look at this S&P 500, what are we seeing? Well, let's come to a year-to-date chart. So it'll give us kind of a year at a glance. We are up almost 25%, which is more than double what the S&P has been up on average over the last, say, 50 years. And, we had this little pullback, the market kind of got its knickers in a twist on Wednesday, when the latest Fed rate cut was announced. And, and then it came down and hit this support level and seems to be bouncing nicely. So, when we look at it, longer term bullish, intermediate term bullish, short term bullish. So like bullish on that one. How about the NASDAQ? Well, this is our tech heavy index, the NASDAQ 100 up 27%. So, heading to the finish line for the year, it may just, eke out a win over the S&P 500. But is this typical for the NASDAQ? Yeah, no. Over the last, say, 30 years, it's averaged maybe 12 to 13% or just over 13. And I mean, this is certainly more than double that. And again, bullish on the longer term. We had, it got hit on Wednesday, just like everything else did, and then came down to the 30-day moving average and appears to be bouncing nicely. Okay. So, bullish on that one. So that's 2 for the bulls, 0 for the bears so far. How about the Dow? So this is the Dow 30. Dow 30, for those of you who are newer to all of this trading stuff, the Dow is based on the price of the stock as opposed to the market cap of the company. That's its weight in, of each company in this index. And, it's up 13%. So, half as much as the NASDAQ, but still, beats a poke in the eye with a sharp stick. And, it came all the way down. It had like 10 or so down days in a row, came down to the 100-day moving average. And that seems to be acting as a support level. And it's done that, this is the 4th time this year it's come down to that 100-day moving average. Now, the other 3 times, the 30-day was, kind of, it was riding along the 100-day moving average. This time, the 30-day was up here. So it had been behaving very, very bullishly. And then, broke that support level and came all the way down. So this one, I think, felt a little more painful for this index, but still, the trend is still uptrending. And then the 4th index is our small caps, 2,000 of the biggest of the small boys. It's down the most, has had the most modest return year to date at 10%. And, we saw this kind of consolidation pattern and it broke out, and now it's come back into this kind of wedge, and we'll just have to see, if this 100-day acts as a support level for it. When we come and we look at the VIX, it's still, between that 15 and 20, it spiked up like there was no tomorrow on Wednesday and has been falling since. And, continuing to fall today, just a smidge, but we'll take it. Okay. I love seeing, people coming in from all over the country. We've got people tuning in from Colorado, from here in Utah, from North Carolina. There are typically some of the usual suspects coming in from Michigan. So yeah, that's cool to see. Okay. So if the last thing we may want to look at, and, I get asked a lot, where do I find these setups? And so today I just pulled up the NASDAQ 100 because it was the most bullish when I first started looking this morning, or looking for examples that we could discuss in class. And I just started clicking through. And so some of these we're going to use in the buy right class at, in a couple of hours. And there's a whole bunch of them that we're going to talk about today. And I didn't have to go very far. And so sometimes, like, we'll say, like, today was sponsored by the letter A, because I don't even get out of the A's, and we already have a bunch of opportunities. So if we just kind of wipe our slate clean, but to just start, I'm going to bring up the sector. So I'm going to come to public, and S&P sector indices. And, who's been leading the pack? Well, I don't think much has changed since Friday. Consumer discretionary, number one. So, and if I click on this, I've linked my chart to the watch list. So consumer discretionary hit a new all-time high on Tuesday. Wednesday, it got hammered, and it appears to have been bouncing since. Communications, do you see a pattern here? Similar? Yeah. Communications in second place, and that too hit a new all-time high within the last week. Technology, same. In fact, it hit that intraday all-time high the day of the Fed announcement. And then financials, they hit a new all-time high back here, almost a month ago now. And then, have been kind of pulling back, and it looks like they may be starting to rally as well. And then, does it look like there's a changing of the guard? Yeah, not really. Because in the last 4 weeks, still consumer discretionary, communications, and technology, the same three are on the podium. Okay. So, if we're looking for bullish opportunities, this may be where we want to be. If we're looking for bearish opportunities, maybe saunter over to the energy sector, or healthcare in the last month has been kind of looking like it's trying to make a comeback, but healthcare has been at the bottom of the heap for a while. Materials has been getting hit too. And, so if we wanted to look for bearish opportunities, if you were just starting, you may be there. I want to look at that. Somebody said utilities are starting to gain. Well, they kind of got, so some might look at this chart, and next year, one of the new things for me, and it's not a new class, but I'm going to be taking over, getting started with technical analysis, which I'm pretty jazzed about. So I'm just saying some, not everyone, but some might look at this and have a teensy bit of consternation. What pattern are we seeing here with utilities? We haven't looked at a lot of this pattern this year. And why, you can tell if I've been posting something on X, because I wonder what stock that was. Some might say what I'm seeing here is a bit of a double top. And then the idea is if it breaks below that, and we have a range here from 420 to 389. So call it about a $30 range that you might expect about a $30 drop, which is ouch. So it may not be making. Yeah. AP 514 is saying, I can't wait for the candle pattern part of the class. Me either. And, Connie Hill, God love her, put together some candle pattern cheat sheets that we will be able to use, and I'll make sure I'm sharing those on the regular last year. But like all the glory for that, goes to Connie for taking the time to create those for us. And so we'll both be posting those on X. And you guys are so smart, saying, yeah, double top, which, and someone else said, well, I see a bear flag, and yeah, you're right. I do too. So it comes down trying to rally. So it hasn't come back down yet. Here we'd be looking for a close below the low of the high day. If we were looking for an entry, and just keep this in mind, because we're going to look at a bunch of charts that we won't necessarily have the time to trade, given we have, an entire 45 minutes. Okay, so let's look at a bearish trade first, because we ended up looking at bullish trades on Friday, and we didn't get to this one. So let's look at Amgen. So, in what sector is Amgen in? Let's just pretend you're not familiar with this company. It's down 9% year to date. So all the indices are up. The weakest of the indices is up 10%, the strongest up 27%, and this poor thing has not been following along. So if we come to the Analyze tab and we come to fundamentals, it'll say, oh, this is in the healthcare sector. So even though several of these analysts maybe, getting their love groove on, and this is not unusual for, like if you love it, want to say, yeah, no, not me. But it's in this healthcare sector. And how has healthcare been doing? Yeah, last place. So sector hasn't been as strong, right? Here's the healthcare sector chart. It's like, ouch. It's only up 1% this year. So it's been kind of acting like an anchor on the S&P 500, hasn't it? This particular thing, this particular sector has not been helping. And then so if we're looking at the market has been strong, but this sector has been the weakest sector in the last 3 months. And this stock has been contributing to that weakness. And then if we come in a little more up close and personal, as I like to say, what kind of patterns are we seeing here? Go ahead and type it in. And then given that we're seeing this type of pattern, what are we looking for? And I just typed it out. That close below the low of the high day. Is it trading below the low of the high day right now? Yes, it is. And so do we have an entry? Yes. Okay. So if I had a trading plan for this one ATR, and this is one of the ones that's on my list, let me just make sure, because I have a whole list of mini sessions that I want to do over the break. One ATR for long puts. Okay, so but we're basically looking to flip it and reverse it. Because we do have an example trading plan in the trade management mini session series for long calls. Yeah, somebody said, but it's kind of diverging on the MACD. I like that you noticed that, Meredith. And so what does Meredith mean by that? Well, we have a new low here, but we don't have as high a low on the MACD. So we've got this divergence here, which is saying this might be coming to an end. So the idea here is that, this could be coming to an end, and these don't always follow through, but we're looking for a very short-term move. How short a term? Well, in an average day, this stock over the last 14 days has moved about $6. We're going to go with $6.92 just because that was the math I did, but it's $6.97 currently. And if you don't have ATR on your chart, you can just come to studies, edit studies, and type in over here ATR, and then come down here and you add it. I've already got it, so I'm not going to do it again. But that's how you would add it. And so we're going to come to the trade tab. We want to buy what? We want to buy a put. Why is that? Because we're bearish, right? And we let's say if all goes according to plan, we get out of this trade tomorrow. And so if we look at January, we have 25 days left. We want to look in that range of, we want at least 3 weeks plus the number of days we might be in the trade. Now we've got Christmas, we've got, some shorter days, trading days coming up. And we also have, Christmas Day where we're closed. So we might want to come out to February here where we've got 60 days. Now, what's the advantage is time decay is going to be less. But the options are going to be more expensive. And so we have to buy what we can afford because we don't want to risk more than $500, right? And so we'd have to come out to this 245, which means our delta is 25. We could maybe do the 250. Here we're risking 570. So that's a little rich for us. Now, if we come to January, we could do the 260 for 470, but time is going to, every day we're in the trade, whether the markets are open or not, at 260, it's 11 cents a day we're losing in value just because of the ticking of the clock. When we come down to February and we look at this 245 strike, it's 7 cents a day. You may say, well, 4 cents a day, like, and that's not that big a deal. Well, it all adds up. Like in a week, that's 28 cents. That's, over 5% difference if we end up being in this until next week. So we're going to do this. We're going to come out to February, even though our expectation is that we will likely be out of this trade one way or the other by the end of the week. And we are going to buy a single. And then I'm going to come over here and we're going to change this to our scratch pad. Just so that I can type this in so people can see the math a little better. Okay, so here is our 1 ATR bearish example as promised. And this one is Amgen, and we're going to go with the 1 ATR of 692. Okay. Yeah, somebody's asking, why not do weeklies? Well, if we come back here to my basics, we can see we have a lot of volume on these contracts. If we look at the weeklies, we have very little volume. So the bid-ask spread tends to be higher. We want at least, 20 times the number of contracts that we're thinking of trading. So here, like we could do this 255. There are 44 contracts, but we have a 60-cent bid-ask spread. What do we have here? A 35. So it just makes it easier for us to manage when there are more contracts. Yep. But good question. I like that you're thinking and that you're asking these questions. So our target on this, our target is going to be today's high, and we've just hovered over the candle to determine that. That was 264.80. Or sorry, this is today's. This is going to be our exit. So let me put the target in. Is today's low, which is 261.79. And we're expecting it to drop another $6.92, which would give us a target of 254.89. Now, our exit, if this does not go according to plan, and the first day is the day where you have the most risk, we're going to say today's high is 264.80 plus 692. So our exit, if it goes the way we're not expecting, is going to be 271.72. Okay, so then I'm going to come down here to advanced order, single order, first trigger sequence. We're going to hit a right click, create an opposite order, and we're going to make this a market order that is good till canceled. And then I'm going to click on this little sprocket, and we are going to put in both our target. And our target is if it goes lower than 254.89, 254.89, or if it goes above 271.72. $271.72, we want to exit. Save. Now, when we're looking at our numbers, we may want to just make sure they make sense. Okay, it's trading at 261.55. My target is 254, so about $6 less. That makes sense. And my exit, 271, about $10 more. So that makes sense, right? And then we're going to come to confirm and send. We want to buy a put because we're bearish, right? Right. And then we want to exit if it goes below 254.89 or above 271.72. We're going to put this in our long put bucket and make a note that this is a 1 ATR trade. Now, I am going to record a mini session on how to adjust stops, but someone asked this. They said, you know, when you talk about snugging up a stop, I have no idea how to do that. So we're going to go in, and once this fills, which it has just done, we are going to go in and snug up the exit. And we might make this like $2. We might actually, this is a $245 stop. So we might move the stop up to $1 above. Like the idea is that at the end of the trading day tomorrow, if it hasn't gone down and hit our target, and our target here is at 254.89. So it's above this previous low. So if I want to draw that on the chart, $254.89. This is our 1 ATR target. And if we want to see that on the right, then my exit is currently at 271.72. Here's our 1 ATR exit. So let's say tomorrow, it kind of rallies and it ends up, well, here's today's high, or let's say it ends up that the high for tomorrow is at this same price, at this 261.09. Now, the first day we're giving it 1 ATR worth of latitude. Tomorrow, if it were to close with a high of 261.09, we would take and move the stop up to, let's say we're going to move it up to $2 above that high. So I'm going to move the stop from 271.72 to 263.07. Now, how would I do that? How would I move that stop up or snug that stop up? I would, and let me show you how I would do that. I am going to come to the working orders, and you can see we've got 31 orders in play here. So this is a class where we do a lot of active trading. So we're going to come over here to our weight condition, and there are little sprocket, and then there's the 3 lines. We're going to cancel and replace this order. And then we're going to come to that sprocket and bring up that conditional order again. And it has in here our target and our exit. And we're just going to come in and we're just going to adjust the exit. And we're going to change that to 263.07. And then hit save. And then when we come out to confirm and send, our target is still the same, but now our stop has been snugged up. And what we're attempting to do is take our risk off the table, or to manage our risk. Okay. So somebody's saying, in my smaller account, I might have bought a put spread instead. And, you know, thank you for that segue. 1 ATR new target. Okay. So that's our new exit, or our new exit. Okay. I don't know about adjusting it on the chart. I think if you show it on the chart, so the adjustment math is just saying whatever the high is of tomorrow, like, so assume that we put this on Friday and today it closes, it hasn't reached our target, but it's getting closer. We would take our cursor, hover over it and say, okay, today's high was 264.08. I'm going to move the stop up to you know, $1 or $2. If you go to the 1 ATR trading plan, if it's under $50, we adjust it to 20 cents above the target. If it's between 50 and 100, it's 50 cents. If it's over 100, it's $1. And some might say like, hey, if it's over 250, we're going to make it $2. Okay. Now, someone else said, like, well, in a smaller account, we're taking less risk sometimes if we do a vertical. And so, could we look at something like this and say, hey, you know, could this rally be complete? And are we expecting it to continue down? Adobe is also not playing along well with the indexes, and it's kind of acting as a bit of an anchor on the NASDAQ, down 25% year to date. Could we do a long put vertical on this? So, you know, this recent low as of Friday was 432. Could we look at this and say, well, if we came out to January 17th and we came out to the 450, it's already trading at 446. Could we buy a vertical and say our goal is for it to go below 445? You know, it only has to go down another $1.23 for it to hit for a 445. And the probability of it being in the money at expiration is 47.7%, a 97% chance that it's going to at least come down and kiss it at some time between now and then. Yeah, Daniel's saying, you know, is it a good idea during low volume times like this week to trade in real money? You know, that I can't really guide you on. I mean, the one thing I will say with these shorter term trades is if you're not going to have your eye on the ball, you're going to be busy drinking eggnog and enjoying time with your family and friends. And I know I'm going to be doing a whole bunch of that. Then you may want to say, I'm just not going to place a lot of these shorter term trades that require daily management because I am not willing to commit to managing them daily. Now, if you're willing to make that commitment and you think that something, you know, has potential, then some traders might choose to trade it and some might not. You know, but if we look at this and we say our goal with a long vertical is to make 50%, you know, we would, and we're willing to risk up to $500. We could do 2 of these, single order, first trigger sequence, right click, opposite order. We're going to say, hey, when this gets to what, 365-ish? 243 times 1.5, 365. Aren't I just a mathematical genius? Yeah, 365. And so are we bearish? We're bearish. So we are buying a put spread, a long put vertical, because we're bearish on this. Our expectation is that it goes down. We're risking $486. We've got 25 days until January 17th for this to hit its target. We're going to put this in our long put vertical group. We could make up to 514, but we're saying, hey, if we can make 250, we'd be happy. Okay. Yeah. Somebody's saying, hey, I'll be trading. Well, then go for it. You know, like it just, whatever floats your boat. Okay. And then again, if you want to put that on the chart, you just draw a line. And I'm not too particular about where the line is, like when I first draw it, because I'm going to come in here and make that line 445, which is my target, is for it to go below 445 and stay there. So it was 450, 445, January 17th. So as soon as I look at this, I know that I'm bearish on this stock. I have a bearish trade on it. And my goal or my expectation is that this stock is going to go below 445 and stay there long enough for it to hit my target. Okay. Does that sound good? Now, if you want to do, that's all we're going to do on the bearish side of the street. But if you wanted to look at, do some other practicing in your paper money, might you look at GE Healthcare? Has this been downtrending? Well, yeah, it's only up like 1.5%. That's kind of sad. And, you know, is it in the healthcare sector? Well, I'd hazard a guess, given it's called GE Healthcare. How about IDEX? IDEX Labs, that kind of sounds healthcare-y too, doesn't it? If you want to check healthcare. So, you know, sorry, sister, this one down 26%. And does it look like we have a little bit of a bear flag happening? Yes, sir, Bob. Okay, how about Lynn? You know, another downtrending stock, you know, up only 2% for the whole year. It's gone from 487 to 417. Tried to rally Friday. Looks like it's fallen again today. How about Mondelez? Like, this one surprised me. Isn't this the time of year when people are buying like Cheetos and Doritos? And isn't that what these guys sell? But I mean, these guys have been on the struggle bus for what? Since September. So that's not looking so hot, is it? So, but you might say, hey, this is looking hot, 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 hot to me, because if I can trade options, I might be able to place a trade that would take advantage of this thing rolling down the hill. You know, KHC, you know, Kraft Heinz seems to be on that same struggle bus. How about KDP? Can you tell I'm listing them alphabetically? Because I just went through the stocks listed on the NASDAQ 100. Okay. Sometimes, you know, I haven't looked at a stock in a while. So, okay. So let's go over to the bullish side of the street and look at, well, let's start with Tesla, which was the last one I looked at, actually. And you can see we've done a lot of trades on Tesla. I think this one we're out of. But, you know, this has been really on a roll. It's gone from 212 back here, at October 23rd. It's more than doubled, in the price of the stock. And this kind of bull flag pattern, right? You see what I see? That bull flag came down for 3 days, bouncing today. So could we do something like modestly bullish? Like, could we sell a short put vertical? So as long as it stays above this 416-ish level, and maybe could we sell the 415? Or if we want to be more bullish, could we do a long call vertical on it? You know, so if we come here and we say, well, can we go below 415? If we come out to January, we want time decay working in our favor. So do we have a tight bid-ask spread? Well, it's 15 cents on a $20 option. So it's got to be below 2. I think we meet that criteria. Very heavily traded stock. And we've got over 1,000 contracts, 877 traded today. So could we do this 415 and the 410? And we get $2 for that. So like, if you look at that, if we get $2 and we're risking 3 because the bid-ask spread is $5, and this is just like, you know, a guesstimate, because we'd actually get 207 for that. That's a 66% return on our potential risk. And it's trading right now at 431. You know, so it gives us $16 worth of wiggle room. So if we said, oh, we're okay with that, but we are risking $300 on this trade. We don't want to risk more than say $550. So we don't want to do 2 contracts, because then we'd be risking $600. So little wins, my friends, and discipline. And somebody, okay, I want to read this comment. Where did I put that sheet? Somebody in one of the surveys said, is there a class on stopping us from hitting the panic button? And yes, that class is called the Trade Management Mini Sessions Example Trading Plan List. Because if you have a plan and you follow your plan, then you're going to say, I'm going to follow my plan. So I am not going to panic, because there's no need to panic because I have a plan. So that's a panic prevention process, is having a trading plan. Say that 3 times fast. I dare you. So anyway, here's our short put vertical, which is kind of modestly bullish, because even if it kind of goes sideways, we'd still be okay. We're putting that. Now, what about if we're more bullish? You're saying, like, come on, aren't you bullish on Tesla? Well, you might be. And if you are, you could say, okay, well then what if I did, it's currently trading at 431. What if I came out to this same time frame and I bought the 430? And we can see here, it's like, why is there a 0 on open interest on these 432.50s? Because they just became available today and already 755 contracts. But if we said we're okay with doing a $5 wide spread, so if we buy our vertical, 435, 233. And again, we don't want to be greedy. 233 times 1.5, 349 would be our target. How many can we do? Well, we can do 2 and we're still not over 500. We're 470, single order, first trigger sequence, right click, opposite order. I'm going to make this 349. And, you know, we may get to compare these on our first day of the new year, and we may not. Now, you can put in a stop. What we do with this class is we monitor them. Now, if you want to see how to put in a stop, we would make this first triggers OCO, and then we would come here and create another duplicate order and say, okay, we want to get out if it goes up to 349 or if it loses half its value. So let's say if it goes to, 117. Now, why haven't we been doing this? Or why do we typically not do this? Because sometimes when the market opens, there can be a lot of volatility and you can end up stopped out for a way greater loss. And this is going to be our stop. You can end up stopped out for a way greater loss than the 50%, and then the market settles down and you wouldn't have been out at all. But if we want to see this, we're buying 2 verticals. We want to get out when we're either up 50% or down 50%. And that's how you'd put that in. How is it going to work for new orders when we reset the account? Well, when we reset the account, we follow along. I'm not quite sure of what you mean. We track, we track our results over the course of the year, and we follow up on the trades that we place. And sometimes we follow up on those by, okay, so let me put this in our long call vertical group. Sometimes we follow up on those in class, and then sometimes I don't have quite enough time to follow up on those in class. And this is why you want to subscribe to the channel, because this is the Getting Started with Options series. But if you come to playlists on the Trader Talks on YouTube from Schwab Coaching, and you come down, and I'm going to record a bunch of these. So, keep checking back next week as we approach New Year's. So here's the example trading plans that I talked about. There's one for short put verticals. There's one for long call verticals. There's one for long put verticals. And we did one of each of those types of trades today. And then we also did, a long put with a 1 ATR target, which I haven't quite got on the list yet. But I will often follow up on these comparison type trades here. And these are all in this tangerine or orange section. Postmortems of trades we placed in class. And then down at the very bottom is a bunch of quick and easy videos in the Thinkorswim realm. And this will be where the one that I record on how to exit a 1 ATR trade or how to exit an option trade, that's where this will go. The mechanics, and there's also one here on how to customize the monitor tab or customize a watch list or charts or that kind of stuff. With the short put vertical on Tesla, the anticipated move is that it will go up. But we're also okay if it goes sideways, as long as it doesn't go down below 415. Okay, so guys, believe it or not, our time is up. And I don't know where it goes. It seems to go awfully quickly. We'll be looking at some more bullish strategies come the covered call, buy rights, and short put class starting at 2:00 Eastern. But, you know, when we look at this, what did we do? We bought a put on Amgen. We did a long put vertical on Adobe. So that was 2 bearish trades. We did 2 bullish trades on Tesla. And then we ran out of time. So we'll look at some more like bullish opportunities come then. I'm asking that you hit the like button as we wrap up. Consider it your little holiday gift to me. It lets me know that you found this content valuable. It also moves this up in the algorithm so more people can find this content. It's your chance to do a favor for a fellow you may never even meet without leaving your desk. Hit subscribe, follow Connie and I in the land of Twitter, and have a really awesome holiday, my friends. If I don't see you this afternoon, Merry Christmas. If you celebrate, get out there and hug someone you love. And I will see you. If I don't see you this afternoon, I'll see you in the new year. Take care, everyone. Bye for now.